Welcome to section 2.5 of the foreclosure prevention class, reviewing loan documents. And we are going to have a lot of activities during this session, so several times you will hear me say, please pause this section and go ahead and do the activity in your book as referenced on the page of the slide. The first few we'll go through together, and then the last few you'll do on your own. So the first thing, what we're going to talk about is what documents we collect, why we collect them, what we're looking for, and where they can be found. The first one is the note. The note outlines the characteristics and conditions of the loan and the consequences of default. So basically it's letting you know this is what type of loan you got, this is the loan amount, and this is what happens if you don't make your payment. The deed of trust, or the mortgage, that's the security. That secures the subject property in case of non-payment or default. This is what allows the bank to foreclose, is the deed of trust. So now let's look at the first activity. This is an adjustable rate mortgage note, and go ahead and pause this. You're going to answer the questions on page 2 based on the note that starts on page 3. So go ahead and pause this and do the exercise and then come back and we'll go through it together. Alright, so I'm assuming you've gone through it all. Let's start with the first question. When was the loan closed? Well, the answer to that is going to be under section 3. It's not an obvious answer, so it doesn't say closing date. Now technically the answer would be on, let's see, some notes will have the date where they sign their name, so then you would go just below section 11 where you see the signature. You can find it there, but another way to easily find it is if you go to number 3 under payments. You can see that the first payment is September 1st, 2006. And when you make a mortgage payment, you're basically making that payment 1 month in arrears. So if you make your first payment September, that payment is actually for August. So then this loan would have had to close in July so that the first payment for August would be due in September. So the answer to that is July 2006. Number 2, what was the initial interest rate? That is under section 2 where it says interest. And you can see it says I will pay interest at a yearly rate of 5.75. Number 3, how much is the initial monthly payment? That answer is going to be also under section 3. If you go down to where you see B under section 3, it says amount of my initial monthly payment, $3,061.88. Number 4, when will the interest rate change for the first time? Now you're going to go down to section 4 under interest rate and monthly payment changes, and you will see under change dates. My interest rate, or the interest rate I will pay, may change on the first day of August 1st, 2008. So basically, it'll stay the same for 2 years on this particular loan, and then it can change as of 2008, August. And then the next is how frequently, and in that same sentence you see on that date every 6 months thereafter. So this can adjust every 6 months, and this is where you find that information. Now, this number 6 says, what index will the interest rate be based on? If we go just on section B of number 4, the second sentence, it says the index is the average of the interbank offered rates for 6 months. And it's based on the deposits in the London market, which is the LIBOR. And we talked a little bit about that earlier in an earlier section. So the LIBOR is the index for this one. Number 7, what is the maximum interest rate or cap for the loan? That is going to be also under section 4D, where it says limits on interest rate changes. And it shows that the rate can be no greater than 11.75. And then to answer number 8, which is the minimum, that same sentence, or less than 5.75. So it gives you the max and the minimum all in one sentence. And that's section 4D. And then finally, how can this borrower afford a prepayment penalty? So we go to the prepayment penalty section, which is number 5. And we look, if you go down to the third paragraph, it says, if within 24 months from the date of execution, I make a full prepayment, I will at the same time pay a prepayment charge. So the way to avoid it is to wait till after 24 months or 2 years. So hopefully now I recommend, if you're not comfortable with a note, go ahead and highlight the sample or print it out, highlight the sample so you know where to find this information. This will definitely help you in working with your clients. Now let's go on to the next one. Reviewing loan documents, truth in lending. Now the truth in lending disclosure statement, or the TIL, as we often refer to it, this discloses the annual percentage rate, the finance charges, the total amount financed, total payments, and the loan term. So this gives you a lot of details on the mortgage, or on the mortgage, what they borrowed. A good document to get very familiar with. Now you're going to have an activity on page 7. So go ahead and pause this recording and go ahead and do that activity, and then when you come back, we'll go over it together. All right, hopefully you've gone through everything. We're going to go over the truth in lending activity together. Number 1, what is the annual percentage rate, or as we refer to it, what is the APR? If you look on your truth in lending, that's going to be under APR, which is on the left-hand side, just below that first box where the homeowner's name and address is. And you see 6.44%. Now, is that the interest rate? No, it's not. What that APR lets you know is the total cost of the credit. So that's going to include anything that they paid in addition to the interest that they're paying. So oftentimes that APR will be higher than their actual interest rate. All right, let's continue. Number 2, what is the amount financed? So if we take the box right next to APR, it shows finance charge. That's going to be basically the interest they're paying and any fees over the life of the loan. The next box is the amount financed. So the answer to number 2 is $107,862.93. Number 3, how many payments will be made under this loan? Where to find that is you go, let's go back to that APR box and go right below it where it says your payment schedule will be. Number of payments, 360. So there you go. Sometimes you'll see that broken down, especially like in this particular loan, because that 360 is set, you know it's a fixed rate loan looking at this truth in lending. Sometimes you'll see 24 months at one, and then 8 months at something else if it's adjustable for the first 2 years, or you'll see several different lines, and then you just have to add up all those numbers of payments to see what the total loan term is. Number 4, how much are the monthly principal and interest payments? And that's going to be right beside the total number of payments. So in this case, the answer is $677.29. Number 5, how much is the prepayment penalty? Well, we're going to scoot down the page a bit, and we're going to go down to where you see prepayment. That's right under late charge. And if the first set of boxes have been checked, there would be a prepayment penalty, but those aren't. The second set of boxes says will not have a prepayment penalty. So there's no prepayment penalty on this loan. And then the last question, number 6, is assumption permitted under the terms of this loan? If you go down past prepayment, past insurance, you'll see assumptions. And then in this particular one, it says may not assume the remainder of the loan. So the answer would be no. This loan is not assumable. So hopefully that makes sense. All right, let's move on. The HUD-1, the final document provided at the close of escrow or at closing, which details the charges paid by the borrower and the seller of the property. And then you also have an escrow disclosure statement, which provides the breakdown of payments made into the escrow account. We're going to go into an activity now. The activity is going to be on the HUD-1, and that's going to be on page 9. So if you will, go ahead and pause this recording and do the activity, and then come back and we'll go over it very briefly together. All right, hopefully we're back and we're going to go over the HUD-1. The first question is, what type of loan is this? And that's the easiest of all because it's right at the very top of the HUD-1. You see 1 is FHA, 2 is RHS, 3 is conventional, 4 is VA, 5 is conventional. 3 is conventional uninsured, 5 is conventional insured. And RHS, if you're not familiar, is rural housing. So that's where it tells you what type of loan it would be. All right, now the settlement date, that is going to be in the box labeled I, where it says settlement date. The contract sales price, that's going to be on line 101 under section J. See where it says contract sales price? All right, number 4, principal amount of a new loan, that's going to be line 202. That's also under section J, principal amount of new loan or loans, because it could be having more than one. Number 5, cash from or to borrower. So this lets you know if the borrower gets money back at closing or if they have to bring money. And so that's something you really want to know where that is, and that's going to be line 300, cash at settlement. And that's in bold because that's a very important number. And then finally, number 6, items payable in connection with the loan. That's going to be on line 502, settlement charges to seller. All right? Okay, let's move on. Now you have another activity on the escrow disclosure statement. We're not going to go over that together, but go ahead and take a minute and pause this recording, and those that starts on page 12. All right, we're back. You've got another assignment. Didn't I tell you there's a lot of activities on this? And the reason we do that is these documents are very important. And mainly you just need to know where to find information on these documents. So make sure you go over these thoroughly with someone in your class or someone in your office. Make sure, especially if you're new. If you're not new, you should already know where this information is, and hopefully this is just a refresher for you. But go ahead and pause this, do the activity on page 18, and then come back. All right, welcome back. Now, one more activity. I think this may be the last one, and this goes really quickly. This is on the loan account statement, and this starts on page 21. So go ahead and pause it one more time, do that activity, and then come back. All right, I hope everything went well for you. That is going to be the end of section 2.5, and we are done.